Afternoon all. Welcome to the Trellidor results webinar. We have Terry Dennison, CEO, as well as Damien Judge, CFO, that will be taking us through the presentation. Following the presentation, we will have a Q&A session. You will note at the bottom of the screen that there's a Q&A button. Please type in your answer, which will be addressed following the presentation. Terry, thank you. Over to you.
Thank you, Rian. And thanks for joining us this afternoon. Welcome to the Trellidor Group results presentation for the year ended 30 June 2019. And thanks to PSG for hosting us on the webinar. Well, yet another tough 6 months. We seem to be saying it every time we go around. This economy is lingering at the bottom end, and hopefully we have bottomed. And we'll start to see some shining lights in probably not in the next 12 months, but hopefully in the next 24 months ahead. We anticipated a stronger half two, going back to the half-year results presentation. But unfortunately, the economy hasn't been our friend in half two. There's some salient points for the year. Headline earnings per share at 40.1 cents, which is 26% down on the previous year. We've declared a final dividend of 11.1 cents per share, which is in line with the decline in profit after tax. 81 million EBITDA for the year, which is 22% down year on year. Cash from operations at 71 million and return on invested capital at 17%. As per our stated strategy, we went on a program to repurchase our own shares. During the course of 2019, or the year 2019, 2.1 million shares, an average cost of 4.29 were repurchased and cancelled as part of the announced buyback program. Subsequent to year end, a further 477,000 shares, an average cost of 4.23 were bought back, and they'll be cancelled in due course. Tailor product sales through the Trellidor franchises has continued to grow nicely and finished the year doubled up on 2018 results. And within the Tailor business itself, with a primary focus on improved efficiencies, the implementation of the Trellidor developed production system is progressing well, and we're well into phase 2 of that project. And while offset by the weaker trading conditions, the following positives in the Trellidor business are noted. The factory efficiency project yielded cost savings of 6.2 million, which was ahead of the 2019 target. Very pleasing result. And the benefits of that program will continue into the future. Our UK franchise outperformed a strong 2018, growing its revenue by more than double, by 112%. And our Ghana subsidiary grew its revenue by 43% from 2018, and those are in rand terms. We purchased our Durbanville franchise in the Western Cape mid-October 2018, and subsequent to that purchase on a like-for-like basis for the period November 2018 to June 2019, we achieved a 38% increase in revenue in that territory. Moving to market overview, where in the past 2 years, the main pressure point of the economy on our business has been seen in the middle income market, and also the Western Cape due to localized reasons. Through 2019, or financial year 2019, we've seen the spread of the weak economy into the higher income market, which we see in our premium product set, as well as the outlying areas in South Africa. So we've got some information there on housing, property inflation and value trends. And I think that's reflective of the group's performance through the period as well. If one can believe the graphs, it's nice to see that there is a bit of a bounce in the high value market, which is more the Trellidor business units area. Group growth strategies, looking at acquisitive growth. With the economic pressure likely to continue, focuses on internal organic opportunities rather than large external opportunities. We've seen success in investing in sub-performing franchises, as witnessed by the Durbanville results, and we will look to further opportunities in this area to boost revenue. Sufficient spare capacity exists in both plants. That said, we will still continue to research and study quality external acquisition opportunities as they present themselves. In terms of diversifying product, and that strategy has been with us for a number of years, we improved the roller blind range in the Taylor business during the course of 2018, and sales grew in that product set grew 31% year on year. During the course of half 2 2019, a new external roller blind range was launched, and sales have commenced, and we're starting to see growth in that sector. And during the course of half 2 2020, a new entry-level aluminium shutter, which is currently under development, will be launched. In terms of international growth focus, remains on Africa, but the UK is proving to be a solid outlet, and we look into opportunities in the UK as well. Particularly on Africa, we've got research on the go at the moment into replicating our Ghana business model in East Africa, where we believe there's significant revenue growth opportunity. There's a dedicated team in place busy on that program. We've signed a new franchise to service Uganda and Rwanda. Their training is on the go at the moment, and hopefully they will be commencing during the course of September. We've invested in additional capacity in the way of people to drive both the growth in Africa, but also the focus in the UK. In South Africa, our growth focus remains on synergies, particularly with the Taylor product sales through the Trellidor franchise network. And in that vein, growth in the last financial year doubled up on the previous year to 13.5 million, and growth continues in that area. We've also employed dedicated sales resources to focus on non-residential products across both Trellidor and Taylor products, and are starting to see traction in that area as well. In terms of the group overview, there are no real changes year on year, so the slide is provided for your information. Moving on to the group financial overview, I'd like to hand over to Damian Judge, our CFO, to take you through the results.
Thank you, Terry, and thanks again to everyone for joining us today, and for PSG for hosting us. As reported, revenue for the group has declined 4% year on year. Gross profit followed suit with a 6% decline and a slight margin loss of 0.6% to 45%. Decline in gross profit meant that fixed overheads could not be adequately recovered, and as a result, EBITDA is down 22% and profit after tax 28%. Earnings per share and diluted earnings per share are down 26% to 40 and 40.1 cents respectively. Dividends paid, which is the final 2018 dividends and the interim 2019 dividends, is down 18%. Just to note that bulk of the share buybacks was done in the second half of the year. Therefore, we had limited impact on our weighted average for 2019, although over 2 million shares were cancelled during the year. As highlighted by the property stats earlier, trading conditions remain tight, and this is reflected in the decline in the turnover. The RSA economy is anticipated to remain weak, and therefore geographical expansion both locally in respect of the Taylor business and abroad remain high on the group's agenda. The EBITDA decline is mainly attributable to lower volumes and tough economic conditions and tighter margins. The inflationary impact on inputs and weakening rand has also played its part. The improved factory efficiencies in Trellidor have mitigated some of the above impact, with continued savings expected through 2020. Overall, tighter cost controls have been implemented across the group. In an effort to further improve efficiencies and cost effectiveness, projects are underway, including the centralization of certain services, group buying of specific raw materials, and the rollout of the Trellidor factory system in Taylor is ongoing. The group remains conservatively geared, and in line with our capital allocation strategy, we continue to pay down our current debt, with 21.2 million rand being paid during the year. Debt equity has reduced from 55% to 35% since 2017. From a working capital perspective, a concerted effort has been made to reduce the payable levels during the year, while receivables and inventory have remained fairly consistent and well managed, which is evidenced in the decline of inventory levels reported at half year. Further reduction in regards to inventory are expected through 2020. Capital allocation during the year has focused on internal growth strategies. The purchase of Durbanville franchise has yielded satisfactory results in its first 8 months. The Trellidor efficiency project is completed, and those benefits have started to flow to the income statement. We continue to pay dividends and in addition spent 9.1 million on the buyback of shares, a program that has continued into 2020 with an additional 2 million already being spent. Moving on to the Trellidor segment. Despite the 3% decline in the Trellidor revenue, there have been some positives during the year, particularly outside South Africa, with the UK franchise reporting 112% year-on-year growth and our Ghana operation improving their top line by 43%. Sales into Africa, which is usually buoyed by the traditional Southern African region, still grew by 5% despite the decline in the performance of our neighbours. The results outside of our borders emphasize the Trellidor focus on growing our international market share, which is a key strategy for 2020. The ongoing focus on product development and the previous diversification of our product range has served us well through this difficult time. It is pleasing to note the increased share of our traditional products in 2019, which is mainly driven by the growth through our international markets. Trading margin has improved from 2018, with the cost of sales improving from 53% to 52%. As a result of the efficiency project, and despite reduced volumes and inflationary price increases, semi-variable costs such as wages and overheads were well managed during the period. The 10-month cumulative effect of the efficiency project and the proactive management of costs resulted in a 6.2 million rand cost saving during the year. The foundation in this regard has now been laid, and further savings are expected for the full year in 2020. Onto our Taylor segment. Taylor closes 2019 7% down from the previous period, which is the same decline reported at half year, which indicates some stability through the second half of the year. The highlight during the year has been the growth in sales through the Trellidor franchise network, which has yielded 100% growth year on year. Further growth is expected through this channel in 2020. Aluminium shutters continue to demand the lion's share of Taylor's market, although the overall mix is well spread. Research and development into product innovation remains high on Taylor's agenda. It is pleasing to note that the revamped roller blind range launched through the second half of 2018 has yielded a 31% increase year on year. In keeping with the theme of innovation and building on the success of the roller blind, an external blind range was launched in half year 2019 to add to the diversification of the range. Decreased volumes, weakening exchange rates have had a significant impact on Taylor's trading margins, which they have not been able to adequately offset with price increases during the year. A number of strategies and projects are being implemented to mitigate these factors going forward, including group buying of specific raw materials, implementation of the Trellidor systems, which is also into its second phase, cost reduction through the centralization of certain services, and general cost control. These strategies are expected to yield cost savings through 2020. I'd like to hand back to Terry just to talk you through the prospects for the forthcoming period.
Thanks, Damian, and well taking us through those results. So looking at our prospects, and we have covered some of this ground already, but in essence, the group is more streamlined and has sufficient spare capacity to significantly outperform should the economy turn. We're waiting with anticipation. In terms of the group, the share buyback program will continue through 2020 in line with existing shareholders' approval and anticipated resolutions for 2020, which will be tabled at the AGM in November. The consolidation of the treasury function for the group to optimize the utilization and the cost of our debt facilities has already been put in place, and ongoing research into potential acquisitions with identifiable synergies remains on the agenda. In terms of Taylor, the focus is on margin improvement and tight control. While there has been a slight turnaround in the Western Cape economy, we believe that we need to replicate what we've been able to achieve in the Trellidor business in the Taylor business. The projects are focused on material supply, are expected to yield savings in 2020. They have already been implemented, and the first orders are on the water, expected to arrive during the course of September. The investment in increased sales capacity focused on non-residential projects is expected to continue to yield increased benefits, and the geographic expansion of the Taylor business through the Trellidor franchise network continues and is expected to grow further. In terms of the Trellidor business, a specific project team has been established to develop the implementation strategy to replicate the Ghana model in East Africa, bearing in mind the operational risks of operating businesses in Africa. Demand from the UK continues to grow, and we have the capacity factory-wise to exploit the opportunity. It remains a focus. And in addition to that, we have dedicated an individual within the Trellidor international team to focus on opportunities in the UK and the surrounding European markets. The full year of cost benefits of the efficiency enhancement project will reflect in 2020, as we've already alluded. And we will look further to acquire underperforming franchises when they become available to replicate the success that we've seen in Durbanville. And again, the overall theme on margin improvement and tight cost control continues. So we have provided some additional information. I'm going to hand back to Damien to let us know what's there.
Just for your information, we've included an overview of our cash flow performance since 2016, a graphical representation of our cash conversion since 2017, and an overview of our balance sheet and key performance ratios have also been included.
Okay, excellent. Thank you, gents. So that concludes the presentation. We're now going to start with just a Q&A session. For any questions that any party might have, again, as noted, please click on the Q&A button at the screen, bottom end of the screen, and then type in your question there that you might have for management. So the first question that we've got is from JP Duplessis. The question is, what is the headroom for further share repurchases by Trellidor, and up to what share price level can the board acquire such shares?
Thanks, JP. Yeah, and in terms of headroom, or in terms of the strategy of share repurchase, as I've already mentioned, the share repurchase program will continue in line with AGM resolutions currently in place, and those that we are putting in place to replicate the 2019 program in 2020. Spare cash will be used in the repurchase program, and management have their mandates to execute on the board strategy. I'm not at liberty to mention the prices.
Okay. Thank you, Terry. Second question, also from JP. Taylor was under severe pressure during the period reported, with 7% down in terms of numbers. What is the current outlook for Taylor, and have you seen the activity pick up?
Thanks, JP. Yes, the Taylor business has been under pressure, and it's seen particularly in half two results for the year ended 2019, 30 June. And in essence, it's continued top line pressure, continued top line reduction, margin slippage in the Taylor business, and although tightly controlled overheads, they're still increasing at around inflation mark. So that pressure, the results are really a result of that combined effect. And the mitigation of that in terms of what we can manage internally, we've already mentioned, in terms of efficiencies, factory efficiencies, cost control, and in particular, purchasing synergies, which have been identified in the group. And then in terms of the Western Cape economy, where Taylor is heavily focused, 66% of its revenue comes from the Western Cape, or the Greater Cape Town area, if you like. And we certainly have seen a bit of an increase on year results in the previous few months. So hopefully that continues and will support the efficiency programs.
Excellent, thank you, Terry. The next question is from Hendrik Tron. What have you changed at the Durbanville franchise to affect the significant turnaround?
Yeah, I mean, that's an excellent question, because what did we do differently to what was being done before? Well, in essence, we didn't do very much other than change the one manager that runs the area, and dealt with the hygiene factors of a staff complement that were operating in a very depressed environment, cash flow constrained business, leading to, I would say it's fair to say, depressed staff, and turning that around by improving the hygiene factors around that and having motivated staff going out in the field and converting opportunities better than they were before.
Thank you, Terry. Next question is from Peter Kronberger. How does Trellidor plan to fund any upcoming acquisitions? Given its lower levels of gearing, how much debt headroom does it have available for growth?
Hi, Peter. Thanks for the question. Yeah, our primary go-to capital will be the balance sheet. We have a stated appetite of up to 1.5 times EBITDA, and we've got fairly significant headroom at the moment from where we are. There's 22 months to go on the current term facility, which is a straight pay down facility, and we are free to renegotiate those terms as well with the bank without suffering any penalties. So we believe we have fairly significant or sufficient headroom in our debt capacity to be able to fund acquisitions.
Thank you. We've got a question here from Driekus Kumbroek. What are the chances of a write-down of the Taylor acquisition?
Damien will answer this question.
Thanks very much for the question. We've been through quite a robust process on our valuation of the Taylor acquisition, and there's very little indication at this stage that a write-down is foreseeable in the near future. The market does have to turn in our favour, and there does have to be some improvement in the top line. But we've had a good review of the valuation for the end of 2019, and we're very satisfied with the valuation as it stands currently.
Thank you. Next question is from James. Has there been any loss of market share from Trellidor to competitors?
Hi, James. Unfortunately, we don't have empirical data as to what our competitors are doing, but we do have our internal mechanisms. And I think it's safe to say that our competitors appear to be struggling in the economy as we are. We tend to, as I say, have our internal mechanisms, and they are indicating that. Certainly in a tough environment, sales or chunky deals tend to be robustly fought over, and pricing does come under pressure. So we can see aggressive discounting taking place in larger deals and so on. that also gives us an indication that our opposition are hungry for deals that are out in the market. So I think that Trellidor has lost a bit of market share in the main cities, but in the outlying areas remains very strong and has possibly increased market share in the outlying areas. And in the case of Taylor, the competitive environment definitely has increased, and there are a number of new entrants into the aluminium shutter business, which are all having their nibble at the pie. So there has been a slight degradation in market share in the Taylor business as well, particularly in the aluminium shutter segment, which is also competed by Trellidor. So if you like, Trellidor has probably also taken a little bit of Taylor's market share in that sector. But it's very competitive out there, and everything that we're seeing is the market in general and our competitors in general are feeling the heat of the economy as well.
Thank you, Terry. Right, so the next question is from Rikus Kombrink. How many of the franchises are in distress, and is that a concern or an opportunity?
Yeah, hi, Drickus. Look, the franchise owners, they're small business people. They tend to have a reasonable base of fixed costs in their business, including the franchise owner themselves, who are normally drawing a salary or drawings out of the business. So in terms of distress, if we're talking about our receiving financial aid, we have 3 franchisees receiving financial aid from us at the moment, and we have a model that we work through. As I've already said, we will be looking to underperforming areas to replicate the success of Durbanville, but only where it makes sense. We're certainly not going to rush in where geographically logistical difficulty applies in running a business, but where the opportunities arise, we can and do have the ability and capacity to acquire a few more areas.
Okay, thank you, Terry. Next question from Peter Kronberger. Terry, you mentioned that there are 22 months left on the current term facility and that the terms of the facility can be renegotiated. Does this mean that the company will consider upsizing its current debt facility?
Thanks, Peter. Yes, as Terry mentioned, should the need arise for acquisition, we do have that ability to upsize the debt without incurring any penalties or detrimenting ourselves in any way. So it is an option should the right acquisition or the right opportunity come our way. So we've been very conservative in that respect, but we do have the capacity if required.
Excellent. So one more question. In terms of the Trellidor development production system that's being implemented at the Taylor factory, just timing-wise there, what are we looking at to get that now fully functional and completed?
Yeah, thanks, Rian. Phase 1 of the program was implemented during the course of last financial year, and it was essentially the implementation of an ERP system replicating the system that sits in Trellidor. Phase 2 of the implementation is a bespoke manufacturing system which has been developed and enhanced by the Trellidor business over the course of many years. The current iteration that sits in the Trellidor factory have enabled us to get superior information in a custom-made, custom-designed production system. And the Taylor process is very, very similar. The products are different, but the process is very, very similar to the Trellidor factory. And it makes perfect sense to replicate the information flow that we have in Trellidor, and we've been able to successfully act on to drive further and further efficiencies out of that factory. So the implementation of phase 2 of that project should be complete through October, November. We should be in place to yield the benefits.
Right, seeing that there are no further questions, this now concludes the presentation. Thanks very much for everybody for attending. Just a reminder that the presentation is on the Trellidor website, should you wish to download same. Thank you very much.